Everybody talks about indicators, chart patterns, price action. But there's one pattern, one setup that almost nobody talks about. It's simple, powerful, and can completely change the way you see the market. I call it the 1H pattern with the 1M strategy. And trust me, once you understand how it works, you'll realize trading isn't about guessing, it's about timing. Now, before we begin, this video is for educational purposes only, not financial advice. I'm just sharing what has personally worked for me over the years. So let's dive in. What is the 1H pattern? So first, what exactly is the 1H pattern? The 1H means the 1 hour time frame. It's the perfect middle ground, not too fast like the 1 minute chart and not too slow like the daily one. Here's what makes it powerful. You can clearly see where big money reacts. And that's exactly what we're trying to find. The 1H power zone, a zone where price keeps reacting again and again. If you spot a level where price has bounced or rejected 3 or more times, you're probably looking at a strong institutional zone. The hidden power of 1H plus 1M combo. Here's where the secret comes in. Most traders stop at identifying zones on the 1 hour chart. But what if I told you the real edge comes when you combine it with the 1 minute chart? Sounds crazy, right? But here's the logic. The 1 hour chart shows the area of interest and the 1 minute chart shows the exact moment of entry. So once price approaches your 1H zone, switch to the 1M chart. Wait for confirmation, a sharp rejection candle, a sudden spike in volume, or a quick wick that traps breakout traders. That's your cue. It means the smart money is reacting right now. And that's where you take your entry, with a very tight stop loss and clear logic. Step-by-step setup. Let me break this down step by step. Open the 1 hour chart, use NDX, SPY, or any highly liquid stock. Mark zones where price reacted 3+ times, strong support or resistance. Highlight that area with a rectangle box. Now switch to the 1 minute chart. Wait for price to approach your 1H zone. Look for rejection, small candle with long wick or quick pushback. Enter only after confirmation. Keep your stop loss just below or above the zone. Aim for a 1:2 or 1:3 risk to reward. That's it. No fancy indicators, no complicated math, just pure price action and patience. Common mistakes. Here's where most traders mess it up. They jump in too early. They see price near the zone and think, oh, it's time to buy. But they forget to wait for confirmation. And when the market fakes them out, they panic, blame the strategy, and move on to the next shiny thing. Don't do that. The 1H pattern works because it gives context, but only if you wait for the market to show its hand first. Patience isn't optional, it's the edge. The real talk about risk. Now, let's be real for a second. This isn't a magic formula. It's not going to make you rich overnight. It's a framework, a way to read market structure with higher accuracy and smaller risk. If you manage your risk properly, even a 50% win rate can make you profitable. Personally, I never risk more than 1 to 2% per trade. That discipline, not luck, is what separates consistent traders from emotional ones. So that's the 1H pattern nobody talks about. A clean logic-based setup that combines higher time frame zones with lower time frame precision. If this video helped you understand something new, drop a like and comment 1H strategy down below so I know you want me to break down the live examples in the next video. And don't forget to subscribe, because next week I am revealing something even more powerful. The VWAP trap setup, a pattern used by real prop traders to catch fake breakouts. Until then, stay patient, stay consistent, and remember, your edge is your discipline. See you in the next one.